Hey everybody, Juan Ortega here, your business coach, and here is your business tip of the week. So today I want to talk to you about a term that you probably hear me mention quite a bit, and it's a good refresher, very important fundamental understanding when it comes to business, and that is the break-even point or breaking even. And we refer to this in many ways. Sometimes we can look at it just from a business in itself, whether that business is breaking even or not, or you can also look at it as an individual per project basis. So if your business is all about projects, you can look at each client or each project or each proposal that you did, each job. You can look at it and say, did I break even? So the business needs to be breaking even, and the business breaks even when all of your transactions are also breaking even, or in other words, being profitable. And so let me explain here. I have a little bit of a chart. Now, don't get too confused with, don't focus too much on the numbers or the dollar signs. Don't focus too much on the angles in which these lines are here. It's just more for visual purposes. But let's look at the red line first that goes across. This is your fixed expenses or fixed costs that every business has. These are things like rent and or mortgage, maybe telephone, maybe internet, those sort of things that you can pretty much predict what your expenses are going to be month to month. Then you have your variable expenses or variable costs, which is represented in the purple line here. And so when you combine your fixed expenses with your variable expenses, you have your total expenses, which is the yellow line. Okay, so the yellow line represents your total monthly expenses to run your business, both variable and fixed. And then the blue line represents your revenue, your income, your sales. So what I wanted to focus in on here in this particular example is the moment in which the blue line surpasses the yellow line, or the moment in which your revenue surpasses your total expenses. That is what we call the break-even point. And if you notice, I did mention the green line down at the bottom. The green line is your net profit, what you take home, and that's why it's lower down on the illustration here, because that's the lowest number usually out of all of these. And so the moment in which your revenue surpasses your expenses, that is the moment that your business hits break even or becomes profitable. And when you're in a startup business mode, you want to hit that break even point as quickly as possible, because until that point, you're losing money. So in a business, you're either making money or you're losing money. And that transition point from one to the other, that's called the break-even point. And so as a startup, you want to reach that break-even point as quickly as possible. Now, many businesses, especially because of what we saw last year with the challenges in the economy, they, after many years of being profitable, they suddenly found themselves underperforming and being not profitable, running a non-profitable business on a monthly basis. And so your job there, if that's the situation that you're in, is to get into that, get into the black as quickly as possible, get to being profitable as quickly as possible. So you want to be able to understand where that break-even point is, and more importantly, what you can do to get there. So speaking of that, when we think of, well, why is this important to know? Well, you need to know what your monthly expenses are. You need to know when you actually become profitable in your business. And what's interesting about this is that even though you might be running a very successful business who's been profitable for a long time, it's still a great idea to know what your break-even point is, not just per year or per month, but you could also look at this per week and also per day. I remember when I was in the restaurant business, we actually look at that almost every day. Every day in the restaurant business is a completely new day, and you need to really look at your break-even point and understand if in that given day you're actually surpassing your break-even point, or if you're barely covering your expenses. So I mentioned that the red arrow here indicates the break-even point, and so everything above that becomes profit. So the difference between your revenue and total expenses, that's what we call the profit. And at the end of the day, your job as the business owner is to maximize the utilization of that profit and to make it and the business as profitable as possible, and to know what to do with those profits as well. So utilize to the maximum point the profits and the revenue that's being generated from the business. So one thing, if you're really interested in this and would like to learn more, I actually have a really pretty cool but pretty simple spreadsheet that we developed. I'm going to show you what that looks like here. So if you want a copy of this Excel spreadsheet, just reply back to the email and let me know, and I'll be happy to send you the Excel document. But basically, what makes this even more powerful is that in this particular calculator, we're not just looking at the break-even point, but we're also combining it with the Action Coach 5 ways, which we teach you. And this is what makes this whole exercise so much more powerful and so much more enlightening. And I put some numbers in here just as an example. So the time period, let's say, was 2020, and the business brought in 100,000, and your expenses that year were 50,000. By the way, the blues are the input cells, yellow are formulas, so you don't want to input anything in there. So it automatically calculates that your net income was 50,000 and your profit margin was 50%. Step 2 on here is basically you're going to put in the average dollars spent per client, which is the next yellow box here. And so you put 83. I just put 83 as an example here, and how that basically came about was I put in the income per month, which is 83.33, and then how many transactions I had in any given month, or on average 100. So I actually it'll actually divide it for you, and it'll calculate the $83. So what this is basically saying is, if your business is bringing in 8,300 per month with 100 transactions, then the average value or transaction per client is 83. Then the next part here on step 3 is we put in how many leads the business is getting. So I just put in 50, and of those 50, we turn 25 into paying customers, so it'll automatically calculate that we have a 50% conversion ratio. Well, here's where it gets interesting, is that step 4 is where it basically tells you what your break even is. And the reason all of these cells are yellow is because they're all formulas. So it basically tells you that per year your break even is 50,000, and then it breaks it down all the way up into the day. So again, if you're running a restaurant, if let's say this is a restaurant, you know that you have to generate at least, and it's not $137 because that's your expenses, because your net margin is only 50%. Here's what's interesting. If you have a restaurant and you're looking at this daily, do you need to generate $137? No, you actually need to generate $274 just to break even. And understanding the relationship of these numbers with each other, this is where you really get a great understanding of business, and in specific your business here. So you need to understand that you not only need to have that exact same number to cover your overheads, but depending on what your net margin is, that's actually what you need to do in order to break even. And then the fifth step on here, which is all in yellow again, it calculates it for you, is it basically tells you, look, for you to break even, your average sale needs to be $83, or is $83 actually, and your transactions. So this is how many transactions you would need to have per year, per month, per week, or per day, based on an $83 average value. Which you kind of said earlier. And same thing with the 50% conversion ratio. So in order for you to break even, again, you would need 2,400 leads a year, per month, per week, and per day. Now, this is where it gets interesting, because you can look at this and go, there is no way I can generate 2,400 leads per year when I'm only getting about 100 leads a year, or 200. So this is where you can decide what the best path is for either reaching break even or exceeding break even. Is maybe the best solution here is to raise your prices and not only get $83 per transaction or per customer. Or maybe you look at this and you say, this 50% conversion, that's the key to opportunity here. That's the biggest movement that we can create. And so if we improve that conversion rate from 50% to 75%, everything will come changing. So these numbers really important to know. Not only is it important to know the 5 ways, as we always talk about, but the combination of understanding the break-even point in your business, per year, per month, per week, and per day. But also, when you combine that with the 5 ways, it's really going to give you so much really good information. So, whether you're already profitable or not, make sure that you understand that break even and what the quickest path is to getting your business to the next level. Thanks for watching.